Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video. Where I'm going to be talking about the market-generated information that you're going to find in the order flow. So before we jump in, if you've been enjoying learning from my videos, don't forget to subscribe and click the notification bell so you don't miss any new upload. And if you find today's video helpful, hit the like button for me and leave a comment sharing your biggest takeaway. You know, I love hearing your feedback. Oftentimes I do make videos based off of your suggestions that I find in the comments. So your support really does go a long way in helping me create more content just like this. So again, if you're getting value from my channel, be sure to hit the subscribe button. Okay, so what I'm going to talk about, it's the gold market today because gold was quite interesting. Just pull up the chart here real quick. You know, we had this nice big rally take place in the gold from our lows around 44 up to new highs at 54. All right, and you know we spent Friday we sort of closed around 45. So we're about $10 higher right now. But I want to talk about what's taking place right here in the order flow that can give you some decent signs of what's going to happen later when we come back up to that area. Okay, because once we got past this area, it really became a springboard to higher prices. All right, so let's take a look at the footprint. Okay, so this is your basic order flow footprint chart, right? You know, with the volume on the bid, the volume on the offer, and probably around 8:25 this morning. All right, we sort of hit these areas up in here around the 49 and 49.70-ish area. Okay, I'm just going to draw a line here because we're going to come back to this in a second. But in order flow, there's a lot of information, right? There's a lot of numbers and things that you're looking at in the volume. Okay, and one of the things that I like to focus on, which in my opinion is a great piece of market generated information. What's market generated information? Is simply information that is generated by the market, right? I mean, it's nothing complicated. And what that means is, it's like a support or resistance area based off of the volume. Okay, now I could look at this volume, right? We just rallied up to the swing high up here, and I see a nice big volume coming through here at 49.70, 1949.70, 134 contracts, right? And even, sort of preceding it on the way up, I see there's 78 here, 71, 70, and we hit that area, come off a little bit, going sideways. I get this point of control right up here on the extreme of the red candle, a decent volume up here at 34, and then the market sells off. Okay, now years ago, right, before I even started the Orderflows.com website and doing all that, when I was trading with order flow, what I did is I literally went through charts, right? I don't know how many thousands of days of charts, because it's not just one market but all the other markets, gold, silver, bonds, fives, tens, minis, currencies, all that, to take a look at how markets top out and what are some of the signs of a market topping out. Because all day long, right, markets make swing highs, make swing lows, and if there was something in the order flow that I could identify, sort of pick out in by going through all these different charts, something tangible that if I see the market coming up to a swing high, I can say, aha, I've seen that before, I know what to do. And that is why in the order flows trader, right, we have a lot of tools in there, because these tools that I developed, they were developed for a specific reason, right? Because there was something I've seen in the order flow in the past, right? I didn't just copy these ideas from other softwares out there. These are my own ideas that I put in there. And one of them is the whole concept of prominent point of controls. Okay, and you can see I got level 1, 2, and 3. But I'm just going to focus on this level 3 prominent point of control. Okay, and I'm just going to click apply. And it's going to show me, right, the point of controls that matter. This is what I talk about when I talk about market generated information. The point of control is the price level in the bar with the most volume. Okay, what does that mean? Well, it's telling me that, that's an area where traders were happy to transact the most volume in a bar. Okay, and honestly, every bar is going to have one, right? And oftentimes the point of control should come somewhere around the middle of the bar, like here, right in the middle, here, kind of close to the middle, kind of the middle, the middle, mostly the middle, even on the way down, the middle. But what I found is, when a market is sort of topping out, swing high, doesn't have to be a high of the day, and I'm seeing the heavy volume sort of transacting up near the high of the bar, that's going to be important. That's a level that if the market starts to react from right now, I also want to pay attention to when it comes back to that level later. Okay. So before going forward, right, because this was an interesting level, right? We came up here, 49.70. We traded 4 contracts at 49.80, but we hit 49.70 for some decent volume up in here. Okay. And earlier, a little bit earlier, actually, even this was about 7:20, so about an hour prior. You even got a bearish prominent point of control coming in up here at the swing high at 49.20, right? This is 49.70, which we hit a little bit earlier. So in the back of my head, I'm sort of thinking that as we're coming back up to 49.20, right, over here, this is 49.20, we may run into more size, and we do, right? You can see the 78 here, the 71, the 70. Okay, now we hit that 49.70 area, right, and the market starts selling off. I know I've got supply up in here. Basically between, earlier we had at 49.20, but it's there from 49.20 on up, maybe even as high as 50. Okay. But what's important is the market is reacting to the supply here, and then the market sells off, right? We sell off from 49.70, we get back down into the 45.70 area. So about, a $4 move, right? And then we go down and we actually make new lows down here at 43.80. Then we start going back up. Okay, so as we start going back up, where's my market generated information? It's up here, this blue line, right, that I drew earlier at 49.70. So we're at 43, 80 is the low. We start going up, and again, some nice bullish signs in the order flow. We're seeing some supportive buying coming in. How do I know there's supportive buying coming in? Because I'm seeing bigger volumes on the bid than on the offer. I see a 145 here. I see a 172 here. That's what I like to see on a market that's moving up. And then we get back up, right? Again, 49.80 or 49.70. We do come up to 48.90. Some, and sort of bounce off, going sideways. And then we get right back up here. We get within a couple of ticks, right? We get up to 49.60. Again, 49.70 is my level. Trade 2, sort of come off. That's the first sign that it's running sort of into this market-generated information level of supply. And how do I know that? Well, I'm putting in 1, 2, 3 point of controls more or less at the same area. 2 are coming in at 49.5. 1 is coming in at 49.40. This is a bearish prominent point of control. Okay, but we are trading. That's where the size is trading, just right below that resistance area where there's identified earlier in the order flow that there was supply in the market. Okay, then the market just, is just hanging around there. It doesn't really sell off, comes back up again. Decent volume coming through at 49.30. Again, my level's just right here at 49.70. Just hanging around there, right? It's not selling off. So what do I have? I have a market that's going into resistance. And every time it sort of gets in there, it just stops. It's not selling off yet. Okay, so maybe, you got to start thinking, well, okay, I know I have resistance. I know I have supply here. What should happen? Well, if your market runs into supply and it's a legitimate level, it's going to hold. But if a market runs into supply and obviously you're coming up into a supply area and they're buying it, right? Traders are buying it, but at the same time, you got to think also that the supply in the market is selling as well, right? And then something's going to happen. You're either going to break through or you're going to sell off, because it's not going to just stay here at the supply level all day long. But this is the key part here. We get through this supply level at 49.70, right? And people say, well, why weren't you trading a little bit closer to 49.70? Well, from earlier, right, I actually identified it at, remember this point of control here? Go back at 7:20, right? You sort of ran into this area. We'll take this prominent point of control, okay, here. So it was 49.20 up to 49.70, basically, which we're bouncing around in there. Get up here. bouncing around right in that area again. Now we get through it here, okay? And this is where it gets interesting. How do I know that this breakout is legitimate? Because now we're breaking out beyond a resistance level, okay? That's a breakout, but as you know, not all breakouts work, right? A lot of times breakouts fail. How can we have some sort of confidence that this breakout has probably got some legs to it? Well, then you just look at the footprint, right? What's the volume doing? Well, you see some strong volumes coming in here. 104 on the bid, 130 on the bid. Okay, 63 on the bid, 63 on the bid. So I know that there's some strong passive buyers. There's people there supporting the market. Because remember, you know, technical analysis 101, previous resistance becomes support. Now you're seeing supportive buying coming in the form of strong passive buyers. I mean, earlier, did you see anything in 100 lots coming in here? No. But now that you got through this resistance area, now you're seeing supportive buying coming in. 104, 130, 63, 68, 63. Okay. It goes up, makes a new high. Then it comes off and it sells off where? Right into your previous resistance area again. But we know that there's a good chance that this previous resistance area is going to be support when we saw the supportive buying coming in. And it trades literally right down to that 49.20 area and just sort of hangs around here. But where are we hanging this time? We're hanging above the resistance area, right? Because now it's become support. Then it starts ticking higher. And, just by looking at the footprints, you can see where's the volume coming in. Well, there's decent volume here. There's 48, a 32, 48, a 63, 31.19. So if anything, chances are we're probably going to go higher. And eventually we just pop up to new highs and just keep going up to new highs here. New high, new high, new high, and new high. Right? New high. And where are we right now? I think, it's right here at 53. But the sign was there when you broke out right here. You broke out of your resistance area, identifying that, hey, you know what, this resistance is probably now going to act as support. So if you can identify that resistance area, that breakout is legitimate, because again, if a breakout is legitimate, what was resistance should become support for the market to go higher, right? Here, this was your resistance earlier, basically, right here. Right? From here to here, breakout right here, pull back into your now support to go much higher. Okay, and this is, people say, well, it's not big a move. It is. It's a $500 move. 50 all the way up to 55 before settling in around 53, which is where we're at right now. So again, that's to me, sort of one of the nuances of understanding the volumes, where they're coming in the order flow, and sort of putting these pieces together of the market generated information. I like to talk a lot about what I'm seeing right now, right, in the heat of the moment. Okay, but when you can put the pieces together, right, and this is where something like the prominent point of controls really, really help, right, by identifying these areas right here. I mean, you can trade, these prominent point of controls by themselves to catch a move like this, from, 49 down to 45. But then not only that, you should still keep them in your rearview mirror so that when the market comes back to those levels, you can be looking for a market to react to it or check it, see how it's acting as support or resistance. Again, these are bearish prominent point of controls. It's a bullish one down here, your bullish one in the middle of the move. But again, that's why you see all these tools in our order flow trader software. It's because they're designed for a specific use in the market, right? Based off of how I trade. Because anytime a market makes a high or low, it does leave clues. And then anytime a market gets through a previous high or low, whether it's a swing high or a swing low, it's going to leave clues. You got to look for those. So that's going to wrap up this video on sort of market generated information, using the order flow. So I hope you found these tips helpful for your understanding of order flow. Let me know what you'd like to discuss next by leaving a comment below. I hope you've enjoyed this video. Make sure you hit the like button and subscribe to my channel so you don't miss any of my upcoming videos. So thanks so much for watching and being part of my community. I'll catch you guys on the next video. Bye-bye.